Welcome to the CondoVultures.com podcast with your host, Peter Zalewski, a Miami real estate broker, Wall Street consultant, and expert witness. This podcast is focused on identifying real estate buying opportunities in the South Florida condo market of Miami-Dade, Broward, and Palm Beach counties. The CondoVultures.com podcast is not authorized by the South Florida real estate industry and will most likely annoy many of the region's talking heads. This podcast will feature straight talk and salty language that could be offensive to some. Please remember that past investment success does not determine future gains, especially in South Florida's volatile condo market. For more information, please visit CondoVultures.com.
Welcome to Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski from Condo Vultures. Condo Vultures is a real estate consultancy that relies on data to identify opportunities in the South Florida region for the condo market. For this particular podcast that you're tuning into, this is our condo market velocity report. This is where we take a look at what's going on in the condo market in a particular submarket. This particular focus this week is going to be on the downtown Fort Lauderdale and Beach marketplace. Let me define this marketplace for you. So we'll start Google Earth 30,000 feet up perspective. South Florida is comprised of a 3-county region. You're going to have Miami-Dade County to the south. You'll have Broward County in the center. And ultimately, you're going to have Palm Beach County to the north. Some of the cities that you might recognize in Miami-Dade County are going to be Miami, Miami Beach, Aventura, Coral Gables, Coconut Grove. Some of the cities you'll know in Broward County are going to be Hollywood, Hallandale. It'll be Fort Lauderdale. It'll be Pompano. And then when you get to Palm Beach County, you're going to have Boca Raton. You'll have West Palm Beach, and you'll have Jupiter and Tequesta. So for this particular podcast, we're going to be focusing on the condo market in the downtown Fort Lauderdale and Beach marketplace. How are we defining this marketplace? Pretty simple. We're doing State Road 84, which is Davie Boulevard, going and extending like a magical line to the Stranahan River, which is basically going to be right in and around Port Everglades, which is where the cruise ships and the cargo ships go off. The northern boundary will be Oakland Park Boulevard, and then the eastern boundary will be the Atlantic Ocean. The western boundary will be Interstate 95. So for this podcast, we'll be looking at that particular area, trying to give you a sense of what's going on in the condo market. We'll break it down into 4 segments. First segment is going to be on condos. Second segment will be luxury condos. Third segment will be distressed condos. And the fourth segment is going to be focused on the rental market in downtown Fort Lauderdale and the Beach marketplace. Keep in mind, all the statistics we're going to be referring to, they're going to come from the multiple listing service. Multiple listing service is a database used by people who join a club. And these people who are joining the club, they all have real estate licenses. They join a club. Club is called the Realtor Association. And what do you get for your $1,000 a year membership? You get to use this database. This database is called the multiple listing service. It's a database that is used by listing agents. So people who have a real estate license join the club and turn around and get a listing. They represent somebody trying to sell a property, and they are offered a commission. Well, they're paid a commission if the property sells, and they offer commission if someone brings in a buyer. Those brokers who work on behalf of buyers to try to identify properties to purchase, they're also going to share in the commission. So the key part of it, one of these databases, is all the information is entered in manually. Typically, there'll be a designee or designated person within a brokerage. When a deal gets done, a listing is put in the market, anything like that, all the information is going to go ahead and be put into the marketplace, and it will reflect what's going on. A lot of people use the MLS simply because it's a quick, fast way to get a handle of the marketplace. Now, it does not represent the entire marketplace. Why is that? Well, because you have people who are trying to sell their properties for sale by owner. Anything for sale by owner basically tries to avoid paying a commission, and therefore it's not going to be in the multiple listing service because no realtor is going to be involved. What else is not included in there? Well, properties where you're going to have signs listed on the side of the highway that say, "We buy ugly houses." Generally speaking, the "We buy ugly house" buyers, they're trying to avoid the realtor too, simply because they want to try to get the cheapest possible price. Another example of properties that are not going to be listed in the MLS, those would be the corporate-owned rental buildings, 100, 200, 300 unit complexes where an individual landlord or an entity will control all the units. They simply don't want to pay the commission associated with leasing out all of the 100, 200, 300 units to a particular building. And what many of these groups find is that they hire someone, put them in a leasing office. Maybe they use a second or third person, pay them each between 30 and 60 grand. The amount of money spent on these leasing people is going to be much less than having to pay a commission annually on all of the units being leased. Generally speaking, in South Florida, the asking price to take on a rental listing is going to be about 10% of the gross annual rent. That 10% commission will be split between the realtor or the broker who brings in the tenant and the realtor and broker who ultimately gets the listing. So again, a lot of properties not included in the MLS. Why do people use the MLS? Simply because it's fast and it's quick and they give you some sort of perspective. Professor told me when I was doing a podcast, basically looking at the study that he had done, roughly 80% of the units that are listed in a website such as Zillow are going to be coming from the MLS, and then the difference will be those individual for sale by owner types of units. A lot of people refer to that type of stuff as off-market type of brand or off-market types of property. So that's an idea of what the MLS is. A couple other rules of engagement to keep in mind when you're, for this particular podcast. We're going to be looking at statistics for the first 9 months of 2022, first 9 months of 2022. Why are we not looking at the full year 2022 data yet? Simple. We're in the middle of February. Typically, we give a month to 6 weeks for all of the data to be processed. Remember, I mentioned individuals are entering the data into the MLS, and therefore there can be some lag time. There's paperwork that's missing, whatever the case may be. And ultimately, we want to have time for the individuals processing the deals to go ahead and enter them. So once we put the data together, we don't have to go back and revise it. So we'll be beginning shortly the end year 2022 statistics related to what went on in the condo market in the South Florida Tricounty area. Another thing to keep in mind is if you are listening to this podcast and you want to check out some of the charts that we have available, some of the statistics I'm referring to, easy way to do it. Check out the description of this particular podcast, wherever you're listening to. We're going to provide links for it. Another way to do it, always to take a look at our stats, go to condovulturesrealty.com, condovulturesrealty.com. Once you get there on the homepage, you'll see a box that says Market Intelligence. Click on that Market Intelligence. You're going to see all of the charts that we're including. Now, if you're watching the podcast, and yes, you can watch this podcast, simply go to a platform that permits video podcasting, such as Spotify. There, you can watch me give this presentation. Also, too, you will see the charts embedded into each particular segment. So you have the statistics right there in front of you, or you can simply go the YouTube route. Go look for our handle, which is Condo Vultures TV, Condo Vultures TV. There, you'll be able to see all of the sort of charts included. And then finally, before we take our first commercial break, if you have any comments or questions for us, send an email to inquiry@condovultures.com. INQUIRY at condovultures.com. So we'll take our first commercial break. Other side of the break, we're going to get into what's going on in the condo market in downtown Fort Lauderdale and the beach marketplace in Broward County.
It's a simple formula, and it works. Buy low, sell high. We're Condo Vultures, and when it comes to your real estate, we help you buy low. At Condo Vultures, we represent the buyer, and now's the time to buy. Log on to condovultures.com for more information. Condovultures.com. And remember, before you sell high, you have to buy low. Featured in the New York Times, Wall Street Journal, 60 Minutes, and Time Magazine. Condo Vultures Realty, a licensed Florida real estate brokerage capitalizing on the condo correction since 2006.
Welcome back to the Miami Real Estate Investing Podcast. I'm Peter Zalewski from Condo Vultures. For this segment, we're going to deal with the overall condo marketplace in downtown Fort Lauderdale and the beach. And again, the boundaries are going to be Oakland Park Boulevard to the north, going south to State Road 84, which is also Davie Boulevard. Imaginary line would extend from State Road 84 in and around Port Everglades to the Stranahan River. Then on the east side, our boundary will be the Atlantic Ocean. West side will be Interstate 95. So what do we got going on in the condo market in downtown Fort Lauderdale and the beach? 438 condos for sale, 438. The average asking price per door or per unit is coming in at just over $1.3 million a door, $1.3 million a door. Now, some people like to talk about what is the price per unit, what's the price per door, what's the price per house. That's probably the wrong number to look at. The right number to look at is price per square foot. And why is that? Well, a condo, you should consider it as a commodity. You should consider it no different than you would gasoline, than you would pork bellies, coffee, orange juice, any and all of the above. And why is that? Well, when a condo is built, effectively all the units in a particular line are going to be virtually the same. The only thing that will differ will simply be the height in terms of your view. And what does that mean? Well, what that means is condos are laid out. Condos are meant to sell based on a particular line, a particular type of layout. There's nothing unique for the most part about many of these individual condos. So what we find is when you're looking at these condominiums, whether it's an 01 line, no 2 line, no 3 line, no 4 line, all the layouts are the same, except when you maybe get to a higher floor, like a penthouse, where the ceiling might be a little bit taller. It might be a little bit taller. So the 01, they're all going to be the same. The 02, they're all going to be the same, maybe with the exception of the penthouse. So when you're factoring in pricing, you virtually don't even have to visit the unit other than to make sure it's actually exists. Because this is South Florida, and we do have a reputation for fraud. Now compare that to a single family house. Single family house, what's going to be important there is, where is the property located? What is the lot shape? Are there a lot of trees? Is there a lot of foliage? How many stories is the house? What are the interiors like? What's the square footage of the house? All of those things that make a house unique, you're not going to find in a condominium. Some owners of condominiums will over-improve their units, think they're going to get their money back. But generally speaking, a condo tends to trade like a commodity. And therefore, these over-improvements for the most part are never really enjoyed by that person who spent the money upgrading the unit. They're typically enjoyed by the person who buys the unit and pays the market price and gets all these extra benefits of upgrade. So what's the price per square foot? Asking price today for a condo in downtown Fort Lauderdale Beach Marketplace, $753 a foot, $753 a foot. And those condos that are on the market, they've been there an average of 107 days and counting, 107 days and counting. Now, pending sales, these are the units that were listed for sale and have now gone under contract. 96 pending sales. Average asking price when the units went pending, just under $1.2 million a door, $1.2 million a door. Now, price per square foot, what's the average when they went pending? $634 a foot, $634 a foot. And those pending sales, they've been listed for sale and pending a grand total of 78 days. And then finally, transactions that occurred first 9 months of 2022, 1,306 transactions, 1,306. And they traded $904,735 a door, $904,735 a door. What do these places trade for? Price per square foot? $548 a foot, $548 a foot. And then finally, days on market. It took them 86 days to be listed, to go pending, and to close. 86 days to go listing, to go pending, to be closed. Now let's compare that to the units that are currently on the marketplace. Currently, those units on for sale, they've been there 107 days. They haven't even gone under contract yet. Plus, they're going to need some time to close once they do go under contract, if they ever do. Generally speaking, it'll take 30 to 60 days from the point you go under contract to the time you actually close. So you're looking at 107 days at this point, where those units that trade in the first 9 months of the year, they traded in 86 days. So you can see there's a disconnect occurring between the sellers and ultimately the buyers. Now, why is that? Some of the reasons may be the fact that we're at the peak of the winter buying season. So those sellers who are trying to sell, they realize many people from the Northern Hemisphere are all descended about South Florida right now. Why is that? Because the weather's cold up north and it's absolutely beautiful down here. So some sellers are optimistic and they think they can get a higher price, and they don't want to pull the trigger and sell too early because there's still weeks left of gorgeous weather, while the weather up north is going to be extremely cold. So that's a sign of maybe what's going on. Now, let's look at the spread between the average asking price for those properties for sale and the average transaction price. What we tend to find is when that spread is between what a seller wants versus what an average transaction price is, once there's about a 20% spread or premium or maybe fat, that will generally bring in a would-be buyer, prospective buyer who might be willing to take a shot, trying to negotiate down the price, typically 20%. Now, when that 20% is shrunk or squeezed to about 8 to 12%, then you tend to get a deal done somewhere right in that 8 to 12% range. So what do we got going on for condos price per door in Fort Lauderdale? We got about a 45% spread, 45% spread. So you can see the asking price per door downtown Fort Lauderdale on the beach is excessive at this point. And as a result, buyers aren't pulling the trigger at the same pace and same velocity that they were in the first 9 months of the year. Now, what is this spread on a price per square foot basis? About 38% difference. And again, once it gets to 20, you probably get seeing some activity. Once it gets 8 to 12%, you probably see a deal done. So asking price per door and price per square foot is too high. And therefore, we're not getting the velocity that you would have seen in the first 9 months of the year. And that's why the days on the market number is increasing. Now, how many condos trade in the first 9 months of the year per month? 145 units traded. How did I come up with that number? I looked at the 1,306 that traded between January and September of 2022, divided by the 9-month span, and I came up with 145 deals per month. If I take that 145 and divide it what's currently on the market, which is 435 plus units, I'm going to come up with 3 months of supply, 3 months of supply. What does that number mean? That means it is currently a seller's market in terms of inventory in downtown Fort Lauderdale and the beach. Seller's market. How do you define a seller's market from a buyer's market, from equilibrium? Easy, 6 months. When a market has 6 months of supply, it's generally referred to as equilibrium. When there's less than 6 months, it's called a seller's market because there's nothing to choose from. And when there's more than 6 months, it's called a buyer's market because there's too much to choose from. So looking at the statistics for downtown Fort Lauderdale Beach Marketplace, it is currently a seller's market. However, looking at the statistics with the spreads that are being asked for by sellers versus what the average transaction price is, as well as the days on the market, it suggests to me that we could see a turning point in the condo market in downtown Fort Lauderdale and the beach going forward. So we're going to take a commercial break. Other side of the break, we're going to get into the luxury condo market in the downtown Fort Lauderdale and beach marketplace.
This is Peter Zalewski of the Condo Vultures podcast. I hope you're enjoying the podcast. And I wanted to alert you that if you have a property that you're looking to sell in the Tri-County, South Florida area, I would encourage you to reach out to Jenny Cortez, a licensed real estate broker with cvrrealty.com. She's my partner. She's been in the business for north of 15 years. More importantly, she knows the market. She knows how to get a deal done. And she also realizes that it's more important to get a price that you can accept and sell the property rather than to hold firm on some price that's never going to be achieved and ultimately languish on the market. So if you're looking to do a deal that you want a skilled expert who can help you sell a property, reach out to Jenny Cortez at 305-865-5859, 305-865-5859, or visit her website, cvrrealty.com.
Welcome back to the Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski from Condo Vultures. For this segment, we're going to talk about luxury condos in the downtown Fort Lauderdale and beach marketplace. What is luxury? Luxury is a term you're going to hear thrown around quite a bit in South Florida. Why is the term luxury used all the time? Simple. People who are selling something are trying to get a higher price, and therefore, if they can convince you that something is luxurious, therefore it should be worth more. Generally speaking, that is the hustle. That's what you're going to hear, whether it's related to a bottle of spirits at a bar, whether it's related to some sort of artwork, or whether it's related to a condo. If it's luxurious, let it be known that the price will probably be higher than if it's something that's simply standard. So that raises the question, how do you define luxury? And the answer is nobody really has a definition that's uniform and standardized across the board. So what we've done to statistically take a look at luxury, we came up with an arbitrary number, which is $1 million or 7 figures. And we said, if a property is listed or sold for $1 million or more, we're going to deem it a luxury condo sale. And if it's listed or sold for under $1 million, so something like $999,999, it's not going to be luxurious. So for this segment, we're going to talk about luxury condos, which are those properties $1 million or more. What's going on in downtown Fort Lauderdale and the beach marketplace with luxury condos? 157 for sale, 157 for sale. Average asking price for these luxury condos, $2.8 million each, $2.8 million each. Average price per square foot, asking price, $1,180 a foot, $1,180 a foot, and days on market. These luxury condos have been sitting there 143 days in counting, 143 days in counting. Now, in terms of pending, these are the units that were listed for sale, have now gone under contract and are simply waiting to transact. 44 luxury condos are pending, 44. What's the average asking price when they went pending? Just under $2.1 million a door, $2.1 million a door. Price per square foot, $917 a foot for the pending, $917 a foot for the pending luxury condos. And then finally, days on market. They've been listed and they've been pending for a grand total on average of 110 days, 110. Now, transactions between January and September of 2022, there were 289 luxury condos that traded, 289. They traded an average price of just under $2.7 million a door, $2.7 million a door. On a price per square foot basis, they traded for $1,111 per square foot, $1,111 per square foot. And they traded in 223 days, 223 days. Now, let's look at days on market to get an idea of what's going on in the luxury condo market. Well, the units that traded for 223 days. The units that are currently on the market, they've only been there 143 days. So what does that mean? That means the sellers who have high asking prices are in a good position because there's still on average more time to go before they need to make the decision to reduce their price or tinker with their property in order to get it done. So if you are a seller, right now you're still sitting in catbird seat because you're at the peak of the winter buying season, and you're not even close yet to the average number of days it's going to take to get one of these units traded. Basically, it did in the first 9 months of 2022. So that's advantage seller. Now, what about on the asking prices? What is the spread? What's the premium? Now, this will be the average asking price compared to the average transaction price. Generally speaking, when that difference is about 20%, so 20% inflation in order to maybe try to get the seller more than they want. And also it's a sign that a buyer coming in, they know if it's 20% difference, they generally speaking can come in and throw some sort of offer and negotiate down the price. 20% is typically where you get some activity. and 8 to 12% typically is when you get a deal kind of done. So what do we got going on in terms of average price per door? It's only 3% difference, 3% difference. Remember, 2.8 million is what the average asking price is for a luxury condo versus 2.7 is what they traded for. So the condos on the market today, they are trading to sell. And if there is any negotiation whatsoever, the people buying today are probably going to buy for less than those did in the first 9 months of the year. Places that are priced today to sell, they're good to go. Now it's just a matter of, are the sellers going to accept some of the offers that are being brought in? Keep in mind, there's talks about a recession. There talks about increased interest rate rises, as well as what's going on in inflation and a strong dollar. So these are all factors that need to be considered. Now, average price per square foot, what's the spread there? About 6%. So the average asking price is $1,180 a foot for a luxury condo in downtown Fort Lauderdale Beach versus the average transaction price was $1,111. Again, priced appropriately to sell. So it looks like the luxury condo market is it's a market where sellers basically want to unload their product. Question is, can they get the buyers to come in and ultimately take them down? Well, in the first 9 months of the year, there was an average of 32 luxury condos that traded in downtown Fort Lauderdale Beach on average per month, 32 that traded on average per month. If I take the 32 that traded on average per month, I divide it what's currently in the market, which is 157, I'm going to come up with 4.9 months of supply, What does 4.9 months supply mean? It means it is a seller's market for luxury condos in downtown Fort Lauderdale. How do I come up with that? Well, the rule of thumb is 6 months. 6 months is equilibrium. Anything more than 6 months is a buyer's market, and anything less is a seller's market. So we're sitting in a seller's market for luxury condos in the downtown Fort Lauderdale and Beach marketplace at the peak of the winter buying season. We're going to take a commercial break. Other side of the break, we will get into the distressed condo market in the downtown Fort Lauderdale and Beach marketplace.
This is Peter Zalewski of the Condo Vultures podcast. Before I started doing these podcasts, I was in the business of being a licensed real estate broker, a contributing columnist for the Miami Herald, as well as the Miami Real Deal, but also extra witness work in consulting. So if you are looking for an expert witness, or if you're looking for consulting services, a straight talk perspective as to what's going on in a particular marketplace, a building, or what happened previously, for whatever your situation is, whether you are an attorney, whether you are an institutional fund looking to invest, or whether you're a lender who's trying to come up with some sort of strategy and approach for your lending committee going forward, I just might be able to help you. To get a hold of me, please reach out to peter@condovultures.com. That's peter@condovultures.com, or give me a call to the office at 305-865-5859, 305-865-5859.
Welcome back to the Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski from Condo Vultures. This particular segment, we're going to talk about the distressed condo market in downtown Fort Lauderdale and the Beach area. Now, best place to start is to basically discuss and explain to you what distress is. Distress falls under two categories when it comes to multiple listing that you might find on the MLS. On one side, you're going to have a short sale, and that's a situation where the seller and borrower, one and the same, come up short of repaying the bank and how much is owed. So the bank will accept less than they're actually owed in order to get a deal done. Why would a bank do that? Simply to avoid a foreclosure. Foreclosures will take 9 to 12 months, possibly longer, cost thousands of dollars in legal fees, as well as missed payments. And ultimately, that particular unit, when the bank gets it back, it might be destroyed or damaged, like occurred during the Great Recession, where people would sell off refrigerators, they'd sell off cabinetry, they'd sell off stoves, they'd do anything and everything to try to get something on the way out because they were losing the properties anyway. So that's a short sale. Borrower and owner comes up short of repaying the lender, basically to get out of a property and to avoid a foreclosure. Now, the other side of the transaction is what's called a real estate owned, an REO, a bank owned or foreclosure. And what is that? That's a situation where somebody hasn't paid their mortgage. They've ultimately lost it to the bank. The bank has gone through the 9 to 12 month period, maybe longer. They spent the thousands of dollars. They haven't gotten paid in a year or so. And ultimately they end up with the title and keys. And now the lender's got to turn around and try to sell the property to recoup some of the money they're owed. And generally speaking, whatever's not recouped, that lender will turn around and sue the individual borrower for the difference. So that's the difference between the two categories. Short sale, come up short of repaying your loan. Foreclosure, REO, bank owned, real estate owned. Ultimately, the bank takes title to that particular property. So one is proactive and preventive. The other one is as a result of, and it's cleanup. So what do we got going on in the distressed condo market in the downtown Fort Lauderdale Beach marketplace? Well, currently there's only 2 properties for sale, a combined total of 2. How many are under contract? 0. And how many trade in the first 9 months of 2022? 6. So if I take the 6 that trade in the first 9 months of the year, I'm going to come up with about 0.7 units trading per month, 0.7 units trading per month. Divide out what's currently in the market, which is 2. I come up with 3 months of supply, 3 months of supply. As I mentioned, 6 months is equilibrium, less than 6 months is the seller's market. So it is a seller's market for distressed condos in downtown Fort Lauderdale and the beach, which should be of no surprise. Why? Because a bank, when they take back properties, ultimately need to try to recoup as much money as they can because there's losses associated with that. And the best way to do that is to control the supply. So lenders tend to limit how much product they put in the marketplace in hopes of attracting investors who want to buy distressed condos. And this way you can sort of squeeze the numbers higher, if you will. Now, let's get into each particular category. The short sale, again, which was a preventive attempt by a owner / borrower to try to get out of a unit, not repay the bank everything it's owed, and ultimately be proactive and preemptive in terms of dealing with the situation. Right now in Fort Lauderdale, there were 0 short sales for sale. There were 0 pending sales, and there were 0 transactions in the first 9 months of the year. So that makes it pretty simple. That means that all the statistics we referred to earlier, they're all going to be on the REO side. And what does that mean on the REO side? Again, real estate owned. That means there are 2 units for sale today, that are bank owned. Average asking price for those 2 units, $555,200 a door, $555,200 per door on a price per square foot basis, $526 a foot. And how many days they've been in the market? 200, which is kind of a high number because generally speaking, bank owns tend to go relatively quickly. That would suggest that maybe the pricing is a little bit more aggressive than the investors want to pay. How many units are pending? 0. There were 0 pending REOs in downtown Fort Lauderdale Beach. And then how many units traded? As mentioned previously, 6. 6 transactions. What they trade for? Average of $541,900 a door. $541,900 per door. What was the average price per square foot? $327 a foot. Now you can see why people want to play the distress market. $327 a square foot is a fraction of what the average asking price is per condo in the downtown Fort Lauderdale Beach marketplace. So $327 a foot is the average. And then how many days were these REOs on the market in the first 9 months of the year? Only 27. So think about that. 27 days is how long it took to trade an REO property in downtown Fort Lauderdale Beach in the first 9 months of 2022. However, the units that are available today, they've been there 200 days. So that would suggest that there is a disconnect between what the sellers are asking versus what the investors and the buyers are willing to pay. Now, where does that disconnect come from? Well, it's not coming on the price per door. Why? Because there's only about a 2%, 3% spread roughly, between 2 and 3% spread between the average asking price today and the average transaction price, which again, the average asking price, $555,200, average transaction price, $541,900. So on a price per door basis, the REOs in downtown Fort Lauderdale Beach are appropriately priced to trade. Now, what about on the price per square foot basis? About a 61% spread. So the average price per square foot for an REO, $526 a foot, $526 versus the $327 that they traded for the first 9 months of the year. So this is interesting because those investors who are looking to do deals, they're obviously looking at something that's a little bit more appropriately priced. And the units that are available today, they're about 61% higher than these investors paid the first 9 months of the year, which based on the current market circumstances, whether it be what's going on with inflation, what's going on with rising interest rates, what's going on with the stock market, as well as a strong dollar, suggests that maybe some of the buyers are getting a little bit skittish about buying some of these bank-owned properties, at least at this moment in time, especially based on days on market. Now, in the first 9 months of the year, the average sales pace per month for a REO condo was 0.7. How did I come up with that? Well, I took the 6-month units that traded, divided by the 9 months in terms of the time span, and I come up with 0.7. If I take that 0.7, I divide it on what's currently in the market, which is 2. That's where I come up with 3 months of supply, and that is where you get a seller's market for REO units in the downtown Fort Lauderdale and Beach marketplace. We'll take a short commercial break. Other side of the break, we're going to get into the rental market in downtown Fort Lauderdale and the Beach.
Don't buy a South Florida condo, discounted or distressed, before taking a Condo Vultures correction tour. CondoVultures.com offers weekly bus and walking tours that focus on educating buyers on the how-tos of identifying discounted condos, analyzing the opportunities, and purchasing units. Every tour attendee receives a list of all condo projects in a particular market, a market assessment handout, and unmatched expert analysis. For more information on the condo correction tours, please visit condovultures.eventbrite.com.
Welcome back to the Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski from Condo Vultures. Again, if you want to check out any of our statistics, go to condovulturesrealty.com, condovulturesrealty.com. There you will be able to basically click on market intelligence, and any of the statistics we referred to in this podcast or previous podcast and even future podcasts, all of them should be located there. Now, for this particular segment, we're going to get into the rental market. Many people who purchase condos in the South Florida area, they buy them as primary residence so they can live, or they buy them as second homes or vacation homes so they can come down during the cold winter months and basically hang out and enjoy the weather and not have to pay what it costs for a hotel. But sometimes situations change, whether it's with a job, whether it's with family, whether it's with health, whether it's with you name it. And you as an owner might be put into a situation where you need to try to rent the property. So that's why I always think it's important to be aware of the rental market. So just in case your game plan changes, you're able to adjust and tack in order to be able to sort of play the game and you know kind of where you stand. So I want to talk about the rental market in downtown Fort Lauderdale on the beach. As mentioned in the opening of this podcast, the rental data is going to be extremely sketchy. It's only going to reflect those properties that are listed in the MLS. How's the property getting the MLS? A realtor has to be involved. And generally speaking, a real estate investment trust or a large entity that owns a 100, 200, 300 unit building, they're not going to be paying commissions. And therefore, their statistics are not going to be reflected in there. How do you identify one of these buildings where the statistics will not be reflected? Pretty simple. Look for a big sign on the outside that says for sale and includes a telephone number. Another way to look for it is if you see somebody outside of a unit or a building flipping a sign, trying to get you to pull over, go inside, get some information, chances are that's going to be a corporate owned property, and chances are it's not going to include a realtor, which means it will not be reflected in the statistics we're going to refer to. So that's important to keep in mind. Another thing to keep in mind, the rental market is such a diverse game in terms of how, what the frequency is of the rentals. Makes it kind of difficult to pull information that is going to be apples to apples and it's going to be comparable. It's going to be, defendable, if you will. So as a result of that, and as a result of people renting units by the night, by the week, by the month, by the year, rather than try to parse through all the information, figure out what's what, we're simply going to take the median number. So all the other segments up to this point, we took average. This particular segment, we're going to take the median number. What is median? It's right there in the middle, just to try to make it simple. Because rental data is so sketchy to begin with, why put the extra heavy lifting in for something that will never be 100% complete? So for that being said, let's get into the rental market in downtown Fort Lauderdale, the beach. 434 places for rent, 434. The median, which again is the number right in the middle, and that's what we're using for this section. Median asking price, $3,000 a month. $3,000 a month. What is that price per square foot? Comes up at $299 a foot. $299 a foot on a median basis. How long have these places been on the market? 29 days. 29 days. Those that are pending, currently 202 pending. The median asking price for those that were listed and are currently under contract, $22.13 a month. What is the price per square foot monthly? $2.55 a square foot per month. $2.55 a square foot per month. And those pending, so they were listed, then they went pending, waiting to close. They've been there 20 days on a median basis, 20 days. And then the units that did lease or were leased or did rent in the first 9 months of the year, 1523 were leased. The median price that they were leased for, $2,300 a month, $2,300 a month, or $2.56 a square foot per month, $2.56 a square foot per month. How long did it take those to lease? 26 days. So let's start off looking at the days and what that's reflecting. Well, in the first 9 months of the year, it took 26 days from the point a property was listed to the point a place was ultimately completed and somebody had the ability to move in, a brand new tenant. Well, right now, the places that are for rent, they've been there for 29 days. So there seems to be some sort of disconnect that's beginning. It's not a full-fledged issue yet, but it is taking longer to lease, slightly taking longer to lease a unit in downtown Fort Lauderdale the beach than it did in the first 9 months of 2022. Now, what is the difference in terms of the asking prices? So what do the landlords want versus what places typically were renting for in a particular market? About a 30% spread. As mentioned, 20% is typically when a place is priced 20% higher or so than what the typical price is within a particular building. That's when you tend to get some activity, and then 8 to 12%, you tend to get some sort of deal done. Kind of split the difference, if you know what I mean. So we're looking at 30% on the asking price per month. So that suggests landlords are a little aggressive on their asking price. Now, what is it price per square foot monthly? It's only 17%, only 17%. So that suggests that the landlords that are out there asking today, they're not asking much of a premium. And if, in fact, if anything, they're trying to get some offers in so they can get their places leased. Now, why would they want to do that? Well, they've been sitting there 29 days and they know it should take a grand total of 26 days. Maybe some of them are starting to realize that we're at the peak of the winter buying season, which again, typically goes from November through April. And as we get deep into February, it's going to become harder and harder and more difficult to turn around and lease that place. Why? Because once hurricane season comes, it gets hot, it gets humid. A lot of the tourists from the northern hemisphere disappear. Now suddenly the foot traffic is different. So maybe some of these landlords are starting to realize, okay, let's get this place leased because we're running out of time. So that could be a factor. How many places were leased on average per month in downtown Fort Lauderdale on the beach? Looks like about 169 places, 169. How to come up with that number? I took the 1523 that leased the first 9 months of the year, divided it by 9, and I come up with the 169 leasing pace. If I take the 169 leasing pace divided by what's currently available, which is 434, I'm going to come up with 2.6 months of supply, 2.6 months of supply. As you know from the previous segments in this podcast, 6 months it will be equilibrium. So the rental market in downtown Fort Lauderdale and the beach market is 2.6 months supply. So that would suggest it is a landlord's market. It is a situation where the tenant or the renter doesn't really have a lot to choose from in terms of, and doesn't have a lot to negotiate with. That's what makes it interesting on a price per square foot basis. There's only a 17% spread or 16.8% spread. So looks like downtown Fort Lauderdale, the beach market is a market in limbo. It's a market that possibly could be changing. This is a market to keep an eye on because as we go forward into the summer, if you start to see that number of months of supply increase, it could suggest a real softening in that particular marketplace. So that sums up the downtown Fort Lauderdale and beach marketplace. Let me remind you, if you want to watch our podcast, simply go to a platform that permits it, such as Spotify. If you want to watch us on YouTube, our handle is Condo Vultures TV. If you want to see the charts while you're listening to the podcast, you can go to condovulturesrealty.com, condovulturesrealty.com, look at the market intelligence prop, and there all the data will be listed. Or you could go look at the description of this particular podcast. The description's an easy way to get your hands on the statistics. Also, too, want to remind you, if you want to send us a question or a comment, please send all questions and comments to inquiry@condovultures.com, INQUIRY@condovultures.com. Once again, I'm Peter Zalewski. Thank you for tuning in. Until next time, I hope you take care of yourself. We'll catch up soon. Ciao, ciao.